let's get on with some webinar etiquette, if that's okay. Thank you very much for letting me know that you can hear me. So, webinar etiquette. If you want to ask me a question, please feel free to do so through the webinar. What I might do every now and then is I might stop and read through the questions just to see if I can answer it there and then, or whether it's a question that I'm going to answer as part of the presentation. So I might stop every now and then, read the questions, and then either carry on or answer the question. I'll let you know as it happens. What I would really like you to do, though, if you do want to ask a question, please make sure that you put that question in the Q&A box. You have two options to communicate with me throughout this webinar. You've got the Q&A option, or you've got the chat option. If you ask a question in the Q&A option, then it means that I can see that question on its own, and it will make sure that I answer that question. Whereas if you put the question in the chat box, then that's just like an entire feed of what everybody's writing. So I can't see it on its own, and therefore I might miss it. So please, if you've got a question, make sure it goes in the Q&A box and I will answer the question. So thanks very much for being here. It is, God, I don't even know what day it is. I think it's Tuesday today. It's Tuesday or Wednesday? I know it's Wednesday today, isn't it? So welcome to this very wet Wednesday in the Northwest. And we're going to be talking about flips, refurbs, and BRR. So first of all, a little bit about me, just to let you know why I'm the right person to be talking to you about this kind of stuff. So my name is Chris Kirkwood, and I am the franchise director here at Sourced. And before I was the franchise director, I'd founded, run and grown multiple businesses in different sectors. I wasn't just in property. I haven't always been in property. Property was something that I got into because I was running other businesses, and those businesses were creating a lot of cash flow, and I wanted somewhere to invest that money. And so I looked at property because in the UK, it is drummed into you, isn't it? It's drummed into you that property is the place that when you've made a bit of money, that's the place that you go to really scale that growth. So I got into it by not doing any education, not reading any books about it. I got into it by buying property, and I made a load of mistakes when I first started building my portfolio. But then the more I learned about property, the more experience I got, the more I targeted, the more I honed exactly what I was doing in order to make the most amount of money. Now, in that process, I have continued and still continue to do flips, refurbs, and BRR. So this is absolutely something that is relevant to you if you're just starting out your property journey, or if you are scaling your property journey, or if you're looking to make more money and you're very experienced in property. So the scale of my property involvement has been from about 55 grand up to a development of 150 million. So it's pretty broad. 55 grand, I'm sure I can do better than that. I'm sure I can buy something cheaper than that and make a decent amount of money off. If anything, I think going lower is going to be a lot easier than going above 150 million. But I want to keep improving the breadth of those numbers. So in my time, not only have I done a lot of exit strategies for property and a lot of different strategies and a lot of different ways of negotiating deals and putting deals together, but also as the franchise director, I oversee all franchise operations here at Sourced. We have about 150 franchisees currently. And of those 150 franchisees, they get the opportunity to find deals and run those deals by us. So we can suggest different ways of structuring those deals. We can suggest different ways that those deals might work, or even the deal that the franchisee sends us might look profitable, but we can think of a way to make it more profitable, and we'll feed that back to the franchisee. So not only have I been involved in my own deals and building my own portfolio, but also I've been involved in 150 people's other deals and building their portfolios and helping them be successful. So in terms of eyes on deals and influence over deals, well, I don't even care to think about what the number would be, but it's many, many, many hundreds. So I run the franchise side of the business now. We've got sales, we've got support teams. We've got, it's a very thorough, very complete operation that we have here at Sourced Franchise. So that's about me. What about Sourced? Why is Sourced the right provider to be talking to you? Well, Sourced started in 2017, and we noticed in the marketplace in property that there's a lot of trainers out there. There's a lot of trainers who, you'll pay a set fee for, you'll come into a classroom, they'll throw a load of information at you, and then you're out the door, and it's up to you. It's totally on your back. You are on your own. It is your responsibility to deliver on the information that you've learned. And there's a fairly scary statistic about the amount of people, or the number of people, should I say, that actually go out and deliver on that information, because the vast majority of people don't ever put that information into practice. And so we thought, you know, we've got the knowledge to help people in property, but we want to do it from a different angle. We want to help people deliver that information. We want to be there to help them with the implementation and not just give them the information. So that's why we started it as a franchise, because we train you, we give you access to a lot of ongoing training, but we're also there to help you put it into practice, which again, is part of the reason that we're the right people to talk to. So in August 2018, we received FCA approval, and that was for our sourced capital. And during that time, we were continuing to grow our franchise business. We launched our £150 million development in February 2019, and we got approval for ISA and pension funding into the lending side of our business, Sourced Capital. Source Care created in 2020, and then while that was going on all the way through, we were continually growing the number of franchisees. And actually, something exciting for this year, we've got a phone app that we're launching in 2021. That's going to be coming out around September kind of time. It's currently getting built. It's currently in the process. Actually, it's pretty much been built. It's going through the process of testing. And we'll be testing that for a while to make sure it's absolutely going to be a market leader when it is launched in September. Now, if you've looked at Sourced, you might have seen that we've got quite a lot going on. We've got quite a few different arms to our business. We've got Sourced Property. If you want to find a property that is available from one of our franchisees, you can head over to Sourced Property and you can find it there. That's the red side of our website, if you can see my cursor. We've got Sourced Capital. Sourced Capital raise money, and then they lend it out specifically to franchisees, for franchisees to fund their deals. We've got the developments, which are the in-house developments that we're doing at HQ. We've got Sourced Care, which is a way that we can get into the care sector, take advantage of those long-term leases that are available on property, and all the other benefits that come with securing a long-term lease for a property. And then we've got franchise, which is the operation that I'm in charge of. So flips, refurbs, and BRR. So just to clear up, first of all, what exactly are flips, what are refurbs, and what are BRR, and what are the differences between them? So a flip is something that you're going to sell on very quickly. So you might buy a property, there'll be a margin in that property somewhere, and the aim that you're looking for is to sell that property on. So you could buy a property below market value, for example. It doesn't have to be something that you need to add value to. It might already be depressed because the person that owns that property might be very, very keen to get rid of it. Now, an example of that would be something like a probate property, because in probate, when somebody inherits a property, they probably weren't taking into consideration the costs that they will also inherit when they get that property. And the property might need a refurbishment, and therefore it can't be rented out in its current state. And that person might not have the money in order to keep that property. So they might be very keen to get rid of that property, in which case they might offer you a discount so that they get rid of it very quickly. So you can take that property and then you can potentially just put it onto the market and sell it for the average market rate, and you could make a margin from that property. Or moving on to the next section, you could refurbish that property and therefore add value to it, or increase the margin that you're creating on that property, and then give yourself more money once you've sold that property on. So you bought it at a reduced price, you put a bit of money into it yourself, you've refurbished the property, and then you sell it on. BRR is buy, refurbish, refinance. So you buy a property, you refurbish the property just like we've just talked about, but then instead of you selling it on, you refinance it and hold it yourself for the rental income. So obviously you would go through a process of working out the finances to justify whether that was worth doing. And that depends on your overall situation and what you want to achieve out of property in the next 12, 24, 48 months. Whether it's parking your money in a property to make a residual income from a deal that you refinance and then rent out, or if you want to make those lump sums from generating a margin and then selling the property on and making those lump sums. It's completely down to you, your strategy, and what you're trying to achieve. So talking about your strategy, the main thing, or one of the first things that we look at when we're talking to our franchisees is what their pipeline is going to look at. Because if you're coming into property and you're thinking that you're going to leave a job, if you're going to completely change career and you're going to come into property, then the most important thing that you need to think about is your cash flow. Where is your cash flow coming from? How are you going to take care of your ongoing monthly bills before you start thinking about those big pots of money that you're going to get into? Because generally, the big pots of money, or even the flips and the refurbs and the BRR, you're talking about going through the conveyancing process at least twice, and therefore that's going to take at least 6 months. So how are you going to look after yourself and your family for the next 6 months? If you're looking at bigger projects like commercial conversions or new builds, potentially that could be up to 18, 24 months. How are you taking care of your ongoing liabilities for those 18 to 24 months? So we like to start off with that kind of conversation because it's important that you take care of your fundamentals. There's no point in us having a webinar now and just blowing hot air everywhere about how much money you can make from flips and refurbs, because we want to make sure that if you find a deal that you're going to be able to get to the end of that deal without putting yourself in any kind of financial trouble. So this is a fairly straightforward pipeline that we're looking at here. This is what we use with our franchisees, but it serves the purpose. It demonstrates the point that making ongoing cash flow and coming up with a strategy to make that cash flow is very important. Now, I'm sure we have some webinars about cash flow. So if you go back to the red section of our website, you'll have access to all of our previous webinars in which you can see some of the webinars that we've done on cash flow to help you out specifically in that area. But today we're going to be talking about flips, refurbs, and BRR, and that's sort of the orange section in the middle of this chart. So the orange section in the middle, each deal takes at least 4, 5, 6 months, and it is going to make you some good money. Now, even on here, we've assumed that you're going to make 20 grand profit per one of these deals, and 20 grand profit for a flip or refurb, or well, not a BRR, but 20 grand if you're going to sell it on for a flip or a refurb is fairly modest. But you can see that you don't actually have to do that many deals in a year before that becomes quite a significant sum of money. We had a franchisee a couple of years ago, and their goal was to make £100,000 a year. And we sat down with them, and they were coming up with some pretty convoluted ways and some, looking at big projects. And we had a look in his area and we said, look, in your area, you've actually got a lot of flips available to you that we can see that are even on the market. So instead of looking for that golden goose, that big project that is going to deliver £100,000 worth of profit, in your area, you can find 4 or 5 smaller projects that are going to generate £20,000 to £25,000 worth of income each. So why not go for them instead? It's available in your market. You're going to be able to find them much easier. And all you've got to do is 4 or 5 of them, and you're going to be up to your target of £100,000 income per year. Because what a lot of people do when they're looking and when they're planning into property, they're thinking bigger, they're thinking better, they're thinking more. How can I get a bigger deal? How can I get a better deal? How can I get more? But that big deal, that big conversion, it might take up more of your own money. It might take a lot longer to get to. It might have a lot more risk involved in it, which means that you might get to the same amount of money, but it'll take you longer, or it'll take more of your time so that you can't do other things instead. It might be far simpler to get to that end point if you're going to focus on flips and refurbs, go for smaller deals, go for more of them, and still make that amount of money. So here at Sourced, we have a set process for all of our training events, and we go through property in these 6 steps. So we've got research, source, crunch, secure, structure, package, and I'm going to go through flips and refurbs in pretty much the same way with you today. So let's have a look first of all at research. Now, this section probably takes us about through an hour and a half times 4, about 4.5 hours to go through in total on a training date with our franchisees, because there is a lot of information here. And let me be absolutely clear. Before you go on to Rightmove, before you start talking to estate agents, before you start sending out letters or leaflets direct to vendor in order to get property leads across your desk, the first thing that you need to do is do your research. Because if you're not aware of what is going on in the areas that you're targeting, if you're not aware of the local legislation, if you're not aware of whether there is a potential margin in that area, then potentially you could be wasting your time. And it's all about efficiency, because if you spend an hour, 2 hours going through this amount of research so that you are very well versed at the information in your area, it means that you could save hours and hours and hours further down the line, as well as saving you money. So it's absolutely a fantastic investment to put your time into getting to know your area well. Now, an example of the location and what you need to consider when it comes to the location is something that I've just gone through. So the franchisee that we were talking to, who was trying to get these big deals, but actually in his area, the smaller deals were prevalent and they were everywhere. So it was far better for him to go down that route. Also, from your area, you need to listen to what your area is demanding of you. So location is very closely linked to demand. If you're in a very predominantly blue collar area, then the demand is going to be something completely different from if you're in Kensington, Chelsea, Knightsbridge in London. It's going to be a completely different thing that you need to deliver, a completely different level of finish that you need to deliver, and a completely different product that you need to deliver. So looking at your location objectively and thinking what is necessary. Looking at the growth of your location, moving down to the next one. Looking at the growth is also obviously very important. What has the growth been? What is the predicted growth in your area? Is your area a great place to put your money into and hold property for a long period of time because your expected growth is very high? Or is it the kind of area where the growth has always been fairly flatlining, fairly level, and therefore putting your money in over a long period of time might not be a good idea because you're not going to get the capital appreciation, and therefore doing a straightforward flip is a better idea than doing a BRR. Looking at the metrics, and by metrics, what I'm talking about specifically is comparables. Looking at the metrics, you need to make sure that you're being accurate, and you're being objective, because I've seen far too many times somebody look for comparables to justify an end value of a property, and you look into those comparables in a little bit more detail, and actually you find out that they've cherry-picked the best comparables from their entire town rather than cherry-picking the most appropriate comparables. And when you cherry-pick the most appropriate comparables, the deal doesn't work. So what I'm talking about with comparables is if you're looking at a property that's worth £100,000, you're going to refurb it and you're going to take it up to £200,000 as an end sale price. You need to look for other properties that have sold locally at £200,000 to know that you're going to be able to sell your property for £200,000. But if you're thinking that you need to, or if you can only find properties that have sold for £140,000, £150,000, but you need to sell yours for £200,000 to make a profit, you know that that's very unlikely to happen. So with your metrics, it's all about being objective. Understanding what the rental prices are in your area and understanding what the rental prices are for, because rental prices are going to be different from a three bed to a 4-bed, but also they're going to be different from a 3-bed high-end property to a 3-end lower-end property. So you need to know exactly the detail of what the prices are for the kind of product that you're going to be creating. Sold prices, like I said, in comparables, you need to be very aware of what the sold prices are and also how they differ from one unit to the next. Infrastructure changes around your area are also really important. Infrastructure changes could be the addition of a road, the addition of a bypass. I live quite close to Knutsford in Cheshire, and there's a part of Knutsford, one of the very top-end parts of Knutsford, where they've moved a dual carriageway, and they've actually moved the dual carriageway about a quarter of a mile down the road, away from where it used to be. Now, where it used to be, there were some massive houses on that dual carriageway, but they were depressed in value because of the busyness of this dual carriageway. Now, the local council have moved that dual carriageway further away, which means that this road now in front of these huge houses is far, far quieter. And because it's far quieter, the value of those properties has gone up. The owners of those properties haven't done anything. They haven't paid for that dual carriageway to get moved. It was all done by the council. But because of the infrastructure change, the value of their properties has absolutely skyrocketed. Looking at demand as well. Now, it depends where you're going with this. If you can find demand information online, if you're looking down the rental route, slightly more difficult if you're looking at the sales information, but you can get that from local estate agents. So understanding where the demand is. Again, is it families? Is it sort of families that are looking for starter homes, like 3-bedroom homes? Or is it high-end stuff where families have been together a while, kids are sort of growing up, they need a bigger house? Where is the demand? What is it? And how strong is that demand? Looking at the regeneration as well. So moving down to the next one. I once did a deal. I'm just going to put you on mute for a second while I cough, because I don't want you to listen to it. There we go, all done. Thank you for that. So the regeneration. I once bought a house in an area in Manchester. It was in Salford. So I talked to Salford Council, and I said to Salford Council, I'm buying a house in your area. I can't remember why I was talking to the housing department of the council at the time, but I called them, had a conversation about whatever I needed to talk to them about. And they said, just remind me of the address. So I told them the full address, and they said, oh, right, we've actually got a grant available in that area at the moment. Would you like to hear about it? Now, of course I want to hear about it. Is it a grant? Is it free money? Tell me all about it. I'll gladly sit here and listen to you for a while. And he told me that they had a grant where if I bought a property on that street, I refurbished that property, and I put that property on the rental market, the council would pay me back for the refurbishment costs. 100% of the refurbishment costs is what the council would pay me back for. Now, that was a fairly small deal. I think I bought that property for £67,000. I think it cost me about 20 grand to do it up. And I sold it about 6 or 7 years later, after I'd rented it out, for I think about 125 grand. Now, that was a fairly good deal anyway. But with the council paying me back for the refurbishment cost of about 20 grand, that now went from a fairly good deal to an absolutely phenomenal deal. Regeneration schemes like that are available in lots and lots of different places. I got mine from the housing department of the council. I strongly recommend that you talk to them just to find out if they've got any grants available as well. Finally, we're looking at legislation. Now, legislation is a massive topic all on its own. For example, if you're looking at a HMO, you need to know an awful lot of information about legislation. If you're looking at licenses, you need to understand exactly what that license is for and how you satisfy the requirements of that license. If you're looking at changing a property or splitting a property into 2 separate properties, you need to be very aware of the space standards that restrict what you can, how big or how small you can make those properties. And of course, planning. Planning is a massive minefield on its own. Now, in a flip or a refurb or a BRR, you probably are not going to need to go through planning unless you're putting on some kind of extension or unless there's an Article 4 restriction in that area. However, understanding planning, and there's been a lot of changes this year with planning. You know, we've had the use class change, we've had the permitted development change, and we've had the space standards change. So keeping on top of all of that is absolutely critical. Again, what we do for our franchisees is whenever a change like that goes ahead, we make sure that we email them out. We send out as much information as we can to allow them to understand what the changes are, but also understand the opportunity, because that's what it's all about. So now we go to sourcing, and in sourcing you have online and you have direct to vendor. I mean, we're not breaking any barriers there. That's fairly straightforward. Now, when it comes to online sourcing, everyone will have heard of Rightmove, but the amount of people that I talk to who say that, you know, they'll spend 3 or 4 hours per week on Rightmove, and when I ask them what their strategy is, they say, well, I just put in my location and I start scrolling. And I mean, if you're trying to crush your spirit, then that strategy is absolutely fantastic, because fairly quickly it just all becomes a bit of a blur, doesn't it? And you stop making targeted, focused, detailed decisions fairly quickly when all you're doing is aimlessly scrolling through Rightmove. Just got a question, so I'm just going to jump onto it now. So I'll answer this question straight away. So this is by Elizabeth. What is the best place or website to find out where non-Article 4 areas are in a city? So I'd flip that around, Elizabeth. It's easier to find out where the Article 4 areas are. Now, we just went through this process yesterday with somebody actually, and the information might be on your local council's, or sorry, your what's it called? Your county council's website. However, some county councils don't have very good websites and they don't put the information on there. So the best way that I find it is to Google it. And let's say Nottingham. So if you were in Nottingham and you put Nottingham Article 4, and then you'll get the best search results that come up there. And you can presume that if there is an Article 4 area in one part of Nottingham, there isn't an Article 4 area in another part of Nottingham, because the Article 4 area should be fairly well detailed. Now, there's a lot of other stuff around Article 4 that you need to be aware of, because I'd say that Article 4 is one of the biggest misunderstandings in property, because most people think that Article 4 is just about HMO, whereas it's absolutely not. Article 4 is all about the removal of permitted development rights. That's what Article 4 is. I'm not going to go into it in any more detail here, because I think that might be going too deep and we might start losing people and it'll take too long. So again, when we have some HMO specific webinars, which you can go over to the property side of our website and find out about. So Rightmove. Our tactic for looking at Rightmove is pretty simple. We have a list of keywords, and there is a keyword search function in Rightmove where you can put these keywords in and it will search the exact description of every single advert in Rightmove, and it will select the adverts that have keywords in them that match the keywords that you've put at the top of the page. So if you're looking for a property that's in a fairly distressed state, if it's one of those fixer-uppers already, which means that it's probably priced below the current market value for a property like that, and you're going to refurbish it, or you're going to look for a flip opportunity, then you've got a much better chance of that property coming off because it's already underpriced than you have of buying something that is a nice done-up house that is that is available for anybody to buy and move into straight away. I've had another question: is on the market better than Rightmove? Well, personally, for the keyword search that you can do in Rightmove, I think this function and this filter is what it is really. Gives you much more targeted, much better results than on the market or Zoopla. So you can use these keywords and you can organize a search on Rightmove, and you can be pretty clever about it, because if you're looking for a specific thing, so if you're looking for something with a depressed valuation, then here's a list of the keywords that we would use in order to find a depressed valuation. If you're looking for a property that you can title split and you can sell it on once you've done the title split, then organizing your search like this, but also in the title split search, you'd need to select that you're only going to look at houses, detached houses, semi-detached houses, and terraced houses. And that will bring up whole houses for sale, but they've got the keywords of flats or apartments in them. But you're not looking at flats and apartments, you're only looking at houses. So therefore, that house has probably been split into flats, and now it's being sold all on one title, which again gives you an opportunity. Or an assisted sale potentially, so where you work with the owner, you work together in order to upgrade their property and sell it for a higher price than they've currently got it on the market for. An assisted sale is basically a JV with the owner of the property. But again, you can find those kind of properties by having a look at these keywords. Then looking at unmortgageable properties, which is the bottom one. These keywords will help you find unmortgageable properties. Now, if you found a property that's unmortgageable, it means that the majority of people out there can't buy it, because the majority of people are buying it with a mortgage. So that cuts down the competition for that property. When competition is cut down, it's a supply and demand thing, it means that the price of that property is probably lower as well. Now, what you can do is you can buy that property, you can solve that problem that means that it's currently unmortgageable, put it back on the market, and then you make the margin. Again, you can find those properties by looking at these keywords and organizing your search properly. Looking at direct to vendor. I have to click a lot of times because this cell has not been, this one has not been automated. So looking at direct to vendor, there's loads of ways of contacting people direct to vendor, but there are some ways that you should absolutely be doing if you're trying to find more properties in the property market. So if you're in property, you should be talking to surveyors and solicitors. So have you told those surveyors and those solicitors that you're looking for more properties? Do they know that you're on the hunt to build your portfolio? Because if they don't know that, they should know that, because they deal with property every single day. So they're going to see opportunities every single day, and they might not be interested in them. They might be too far away from them. They might not know how to, they might not have the time to do that conversion, to do that refurbishment themselves. And so they just walk away from them because it's not a hot commodity for them, whereas it is for you. So if you tell them and potentially even say, look, if you suggest a property for me and I end up buying it, I'll pay you 500 quid. To incentivize them to bring those properties to you. The same with tradesmen, or tradespeople, should I say, to be a bit more PC. Tradespeople, they come across this kind of thing where people are telling them, oh yeah, I'm looking to sell this at the minute, or just want to get rid of it, so I need to do a bit of work on it first. Well, could they introduce you to that property so that you can buy that property and you pass 500 quid onto that tradesperson? Again, incentivizing them and putting you at the forefront of their mind. You've now got people out there that are looking for property and they're always thinking about whether they can pass that property on to you. This is the absolute minimum requirement of what you should be doing. You've got your existing network, because there might be somebody that you play football with every Wednesday, and you've played football with this guy every Wednesday for the last 5 years, but you've never talked about property, because when you go there, you talk about football. Now, if you talk to your network about your expanding property knowledge and about your expanding property portfolio, at that point, they'll open up to you and say, oh, actually, I've got some properties that I'm looking to sell at the minute because, just looking to move out of the area, don't want to keep hold of them, or whatever they may be. But again, all you're trying to do is generate as many leads as you can that come across your desk for you to analyze. Now here at Sourced, we have a deal calculator in order for us to analyze the financials. So this is our deal calculator, and what we do is we train all of our franchisees on how to use this. And on training the franchisees how to use this, we also have allowed them to analyze the financials very, 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 very quickly, because again, it's all about efficiency. So I came up with this phrase actually just a couple of days ago. We don't actually make a lot of decisions here at Source. The numbers make the decisions. And when the numbers make the decisions, we stick to it, because if a deal can't work, if we can't make the numbers work by structuring the deal in different ways, then we walk away from it. One of the things that I see a lot of people doing, especially when they're starting off, is they'll look at a property, they like the property, they want to go ahead with it. They put a lot of time into getting all the data right. And when they've put a lot of time into getting the data right, they realize that actually the numbers don't work, because when you're adding stamp duty, when you're adding borrowing costs, when you're adding the cost of the agent to sell the property at the back end for you, when you're adding a contingency and not just putting the straightforward build costs in, when you add those factors that provide you with security and provide you with certainty because you're being very comprehensive with all of your costs, at that point the deal doesn't work. But they feel like they really want to do this deal because they put so much time into it. But that's the wrong way to make a decision. The right way to make a decision is to look at the profit, which in this deal is right up here. To look at that profit and say, that profit's coming out at 43%. I'm absolutely doing that deal. That is a cracking profit margin. And this is a deal that we did a training course at the beginning of this, Monday and Tuesday of this week. And this is one of the properties that one of the guys in the room on that training course found. And if you're particularly good at looking at spreadsheets, you can probably work out that this is a HMO, because we've got lots of different rental income figures down here. But we have provided this has taken, this evolves all the time, this deal calculator, to make it better all the time. But what we do, the way that it's structured is stage one is about the purchase and the build and reselling it. So if you're going to do a flip, or if you're going to do a refurb, you'd only fill out stage one, which is this up here. Stage 2 and 3 are involved in refinancing the deal. So in this deal calculator, you can actually see if you wanted to buy it, what's the viability of it being a flip, what's the viability of it being a refurb, and what's the viability of you keeping it and refinancing it and holding it in your own portfolio. So you'd only have to put the numbers in once to have all of that information available to you. It's a good question here from Jen. Is it not enough to use the ROI? So you could use the ROI. It depends how you want to, what your metrics are and how important it is to you to have that ROI and what that ROI means to you as well, because loads of people have got different definitions of what ROI means. So ROI to me is all of the costs associated with that property as a factor of the overall profit that you're making for that property, and that gives you a percentage. Now, actually, ROI is good for comparing property projects to each other, so one with another. The term that I like better, as well as profit, because essentially that's what it's all about, is ROCE. So what profit doesn't tell you is how much money you've put in to generate that profit, but ROCE does, because ROCE is all about how well your money is performing. And actually, ROCE can be compared from one investment type like property against another investment type like stocks and shares or like wind farms or whatever else you've put your money into. So I think ROCE is a much more thorough way of analyzing how well your money is performing. So in this one, you can see that their profit is 43% just up here, and the return on capital employed is 537%. 537%. Now you compare that to, I think the stock market in the last 10 years has averaged a return of 7%. So you can have 7% or you can have 530% more than that if you wanted to get hold of a deal very similar to the deal that the franchisee found on Monday. So that's why I like ROCE. But essentially, profit for me is it's a combination of profit and ROCE that I look at is the main metrics. But in doing this, and you can replicate a deal calculator like this, you can build something like this in a spreadsheet. It didn't take us long to come up with the overall concept for this deal calculator. And to be honest with you, if I didn't know a formula that I needed, I Googled it and I found the formula online. And that's how I built this deal calculator. But the franchisees use it every single day in order to analyze the viability of the deals. And I'm sure somebody's going to ask, but unfortunately, the deal calculator is only available to source franchisees. But like I said, you can build something like that fairly quickly. I think the first version of the deal calculator that we have, it took maybe 10 hours, I would say, about 10 hours to build. So, but we used it time and time and time again. So it was a very good use of our time. When you're securing property, that's the next stage that we're going to look at. What we're trying to do there is we're trying to make sure that only you can buy that property. You're the only person that can move forward with that property. You have some kind of security, and how you secure it is going to be different as to whether you've bought it or whether you're buying it from an estate agent or whether you're going direct to vendor or whether you're working with the vendor in order to buy that property. Again, in our training, we go through each one of these and we talk about them in detail, and we talk about the flexibility in each one of them in securing that property. Because a sale contract, everybody knows a sale contract. It's what estate agents use to secure property. And you'll probably buy a property by making an offer, and the estate agent has the security over that property because of the sale contract. But in going through the normal conveyancing process, there are still things that you can do that allow you some flexibility to manipulate that deal, to change the structure of that deal, to make it more viable, to make it better for you. Now, looking at the structure, I'm just going to show you 8 different structures that are fairly common, but there are lots of different ways to structure deals. And I'm going to let you into a bit of a secret later as well about how you should look at property, because I think the way that a lot of people look at property is sort of askew. It doesn't really make sense to me. And I'm going to show you how we look at property and how we assess and are solutions orientated around property from looking at it a slightly different way. But again, the different ways of structuring the deal, are you going to back-to-back the deal? Are you going to do it by going through the normal conveyancing process? Are you going to refinance and hold? Are you going to fund it with a peer-to-peer platform or something similar? Is it going to be an option agreement that you're going to hold on to, make money out of for a period of time, and then sell and make it the capital uplift that you've secured over that period of time of owning it? There's lots of different ways that you can do it. Now, I'd say that understanding the different structures is probably one of the most critical things about flips, refurbs, and BRR. And the reason for that is most people out there understand that if you buy a property that is an absolute tip, you throw a bit of money at it, you're going to uplift the value, and you can make that margin, you can put that margin in your pocket. The majority of people understand that. And therefore, the market and the amount of competition out there is very strong. So by understanding different ways that you can structure deals, it means that more deals are open to you. Because if you find 10 deals, if you find 10 properties on Rightmove, and everybody has a look at those 10 properties, the majority of people are going to find 2 of those properties that work for a flip. Whereas if you understand the different structures that you can put into place, you've now got access to 6 out of those 10 properties, because you know ways of making those properties work that still allow you access to that margin and to put that money into your pocket. It's all about creative problem solving. That's what we do very, very well in order to help people see opportunities. Now, this is a very straightforward slide. A lot of our slides are very straightforward. That's because essentially at the core of it, a lot of this is very, very simple. These are roughly speaking, these are the types of finance that you can use when you're doing a flip or a refurb. You've got short-term finance at the top, which is bridging or peer-to-peer. And you've got longer-term financing at the bottom, which is a mortgage or a commercial mortgage. And then you've got a JV, which is sort of any kind of finance. Or sorry, any kind of terms, depending on what your JV partner is looking for out of that deal. Now, essentially, property is a combination of 2 different things. Property is a combination of finance and contracts. If you understand what the difference is between all of these different ways of financing, and you understand what contracts are available to you, you'll be able to solve problems using the finance and using the contracts to allow you access to more deals. However, if you think from a strategy point of view, and this is how most people talk about property, if you think from this is a HMO, therefore I need to fund it like this, therefore I need to use that contract, and then I can get to the end and use it as a HMO. Or this is a commercial conversion, therefore I'll finance it in this way, and I need these contracts to do a commercial conversion, and that will get me to the end point. If you think from a strategy point of view like that, and that's, to be honest with you, the way that most people train, if you think about strategies only, then you're discounting a lot of the different ways that you can actually solve problems that deal, that property, that might fit that structure in order to help you take that deal forward. So again, when we do our training, we're talking about finance all the time. We're talking about the different options, but we're also talking about the contracts that you need and the contracts available to you to help structure that deal in different ways to make it work. So at Sourced, we provide a lot of things for our franchisees. We provide property leads and investor leads and comprehensive training. Our training is strategy based, but we talk about strategy from a different perspective than everybody else. We talk about it from looking at the finance and contracts and coming up with ways to solve problems. And we find properties in the room and we go through the deals and we discuss how we can make those deals work in the room. We've got a nationwide network of 150 franchisees, so you actually become part of a community. You're part of a group of people that are going through exactly the same thing that you're going through, whether you're just starting off, whether you're looking to scale. You obviously get ongoing support from us. You also get a bespoke software, and also the ability for us to fund the project for you via Sourced Capital. So I've just had a question from Gavin, which is, are the franchisees restricted to a geographical territory? The answer for that is both yes and no. So you do have your own territory of 40,000 households. Now you can operate in that territory and you have exclusivity over that territory. You can operate anywhere else in the country where there isn't another franchisee. So if somebody hasn't bought a territory, you can operate there. Now, what we actually see most of our team doing is they might find a property in another franchisee's area. And so we have guidelines in our FAQ section of our CRM system, which says if you find a deal in another franchisee's area, this is the protocol. This is how you go through it. And then that person will contact the other franchisee, and I'd say 9 times out of 10, that other franchisee will say, look, I'm not looking for flips and refurbs at the minute. I'm looking for commercial conversions because I'm at a different stage of what I'm looking for. So that flip that you found, it's all yours. On the understanding that if I find a commercial conversion in your area, we have the same agreement. They'll make that agreement between them, and then everybody moves on and everybody is happy. When it comes to investors and finding investors, we have over 100,000 investors listed that you can have access to. And we produce a huge amount of property leads every year that are in all these different categories. And they come straight into your CRM system for you to analyze, for you to take forward if they are the kind of deal that fit your criteria. Looking at source capital, we can fund up to 100% of the purchase price and the build costs of your project. So potentially minimizing the amount of money that you need to put in yourself. And again, we've got webinars on source capital that you can watch. Got another question from Daniel. Do you work together with international investors with their own limited company? Yeah, absolutely we do, Daniel. We have many people that would fit into that category. Looking at some of the success that our franchisees have achieved, we've got Nadia in Source East London, and she found an assisted sale, essentially a flip, but she was JVing with the property owner in order to deliver this flip. Property was in a really bad state to start off with. Nadia found an investor, and she took that investor's money, did this assisted sale, and then sold it and made a profit for her and for her investor. So a good example of exactly what we're talking about now. When it comes to serviced accommodation, this is Shahid in Manchester, who has sold serviced accommodation deals all over the country, but he focuses and he specializes on Manchester. Now, when it comes to selling deals on and making money out of the first part of what most people see as their cash flow process in coming into property, Shahid is incredibly successful at selling lots of these smaller deals, but making a big pot of money at the end of the year by being very focused and very targeted on doing exactly that. We've got a refurb of an office now, so it's a commercial conversion, but also a refurb. This is Chris in Bournemouth, and this was his first deal where he split this office building. It goes quite a long way back, so it looks quite small there, but it goes quite a long way back. Split it into 14 apartments and then refinanced to release cash, which was secured on a 25-year lease. This was his first ever deal, so this was a very big deal for him to deliver on. But obviously, we helped him all the way through that process. And then we got Everton in Barnet, who he's actually just built his first ever development project. Everton, he's just built his first house, single unit on its own. But the first deal that he ever did was this one, which was serviced accommodation, and it was rent-to-rent service accommodation. So he secured this. The rental of this flat, put it out as serviced accommodation, and he made the margin for that serviced accommodation, which worked out to be about £800 per month. He moved from that deal onto building his own house. So again, we've helped him make that progress. And the way that we help people make progress is through our training events. So we have lots of training events that are repeated all the way throughout the year. So if there's any training events that you want to come on, you can jump onto it. You can get that information. It's all free. It's all part of the franchise. And then you can either put that into practice or think, I'm not going to do that yet. I'm going to wait until I'm in the right position. When you are in the right position, let's say a year later, you can jump onto that training again, and you can remind yourself of all that information, and then you can then put it into practice when it's the right time for you. We've actually got the training schedule that you can download. So there's the link just there. So you should get a recording of this, and in that recording, you can see the slides and you can click on that link in order to get access to our training schedule for this year. I just got another question. We are based, Jen, in Warrington, just outside of Manchester. So what exactly is the package? So you can become part of a national brand and a unique network. You get exclusive access to 40,000 houses. You get ongoing training, which is incredibly comprehensive, incredibly thorough, and goes into a fantastic amount of detail. You get a proven business model, and you get exposure on the property website if you're going to sell deals on, and that goes out to hundreds of thousands of investors. Price for that is £12,000, £12,500 plus VAT. As part of your ongoing license fee, which is £200 per month, you then get property leads, you get investor leads, you get email, phone, video support, and one-to-one support. Again, you get marketing so that we're expanding the brand of Sourced, which expands your credibility in the marketplace. You get support days, you get access to the funding, you get monthly training events, SIN management, which is the Sourced Investor Network, if you want to host your own investor in your own networking meetings. And you get lots of legal documents which will help you go through the entire process, whichever you choose to do. So £200 per month, which is pretty low considering the amount of stuff that we have available to you. And then we charge 5% on your net profit, which is calculated when you actually make money. So we've kept our costs as low as we can on the front end so that we start to, we'll make our profit on you being part of us as a franchise business only when you're already making a profit. That is very important. So for the support guys, you get local support days, monthly training events that you can, some of them might be held regionally instead of always coming up to Warrington. You've got unlimited deal reviews, you've got email, phone, video support, a dedicated account manager, you've got one-to-one visits, and you've got lots of people that we're partnering with to give you discounts to some big software packages that you can use to help find you deals. Like I said, we work on the basis that we make money when you start to make money, which is why we charge a percentage of the net profit that you generate. And that's the end of the presentation. So if you've got any questions, please feel free to go to the Q&A box, which everyone has done so far. So thank you very much for that, and ask me the questions that you have. Okay, so I've got a question from Joseph, which is, what will be the impacts of future of property investment considering the extensive approval of planning all over the country? So if you've been keeping your eye on the planning system this year, you'll see that actually the planning system has made converting a lot of properties much easier than it had previously been. It has made some properties a little bit more difficult to convert. For example, pubs have moved from use class A4 to sui generis, which basically ties them down now and makes sure that if anybody wants to do anything with a pub, you have to go through full planning. But if you look at the new use class E and the permitted development that is surrounding the new use class E, that now opens more types of building to be converted into residential than had previously been. So whereas some things are being restricted, and I would agree that that is going to have a negative impact, Joseph, on future development, I actually think the majority of things have been, the restrictions have been lifted and have been made easier. And so it's going to be far easier to convert a lot of buildings. Now, what that means to town centres and what that means to local councils managing that might mean there are more Article 4 areas, there are more local restrictions. However, there is absolutely an opportunity now to take advantage of that. And so we encourage everybody to, especially we encourage our franchisees to look at that use class E, look at what the opportunities are and jump on that before it becomes ubiquitous. Can I kindly put a link to today's recording? So if you're registered Dilip, which you obviously are because you're on here, you'll actually get the link to today's recording by email. So that will be taken care of for you. Any other questions before I shoot off? I'll just stay here for a couple more minutes because if you're going to ask me a question, you need to type it out. So, oh, there we go. Got another one. Independent reviews. So I'm not sure on the context of that, Jen. Can you expand? Trustpilot. Okay. Can you expand on that? What How can I help you out with that? I've got another question from Gavin. Are we able to see if there is already a franchisee in our area? Yeah, absolutely. You can. You can go to the the red part of our website, which is Source Property, and you can have a look on there because there's an interactive map there that you can see where all of our franchisees are. Or you can email franchise@source.co and Sam will get in touch with you. If you're looking at a specific area, you can send an email over to Sam at franchise@source.co and he'll let you know who's in the area and what the sort of potentials are. Independent reviews for what you offer and how you compare with other companies. Okay, so there you go. So if you look for sourced franchise or you look for sourced capital, you'll see reviews on Trustpilot. There you go. Easy. So look for sourced franchise or sourced capital. When borrowing money for a refurb, you have to pay for that loan while waiting for any planning permission to be granted. Is there a way for shortening waiting times to go ahead with work sooner? Thank you. So there's not a way of shortening. This is a good question actually, because there's not a way of shortening the planning process. You don't have any influence or control over the planning process because it has to be truly, truly independent. And that makes absolute sense to me. But what you can do is you can structure the deal differently. So you could potentially go through an exchange subject to planning. Now that means that you've exchanged on the property, so you've got security over that property, but you haven't yet borrowed because you haven't completed. And if you haven't borrowed, then you don't have any borrowing costs. So that's a different way that you can structure that problem to be a solution. You could also secure the property on an option agreement, for instance, if you didn't want to go through exchange. But there's a number of different ways that you can make that work. But an exchange subject to planning is probably the most common way. Now, what that means is if you don't get planning, you can walk away from that deal without any financial penalties. So that's what the exchange subject to planning allows you to do. How many franchisees are making a profit of more than £100,000? You know what? I have no idea. Right now, sitting here, I don't know how many franchisees are making a profit of more than £100,000. I can take a guess, but a guess isn't what you need. If you have a look at our website and you go to Source Capital, you can see the deals that the franchisees are doing. You can see the deals that are being funded, and you can work out the kind of profit levels that are being funded by us for the franchisees. So that's probably going to be the most honest and accurate way of seeing the kind of deals that the franchisees are doing. So that's all questions answered so far. Has anybody got anything else? Oh, there's somebody's put something in chat. So let me just jump over there. How can one become a lender? So if you go to Source Capital, Tony, you can put your details in there. You can register, and then you can become one of the lenders that puts their money into these deals. The other thing that you could do is our relationship manager on the capital side of the business is a guy called John. Now, if you email franchise@source.co, which is on the bottom of this screen here, and you say that you'd like to be in contact with John to talk about that, he can help you talk about that further, especially if you want to talk about ISAs or pensions or how you're going to invest. Then that would probably be the best course of action, to go to franchise@source.co and then in that email just ask to speak to John. Are we able to speak with a local franchisee just to see how the franchise is working for them? Yeah, absolutely you can. If you're already part of the system, Gavin, it's probably worth speaking to Sam about that, because the local franchisee to you might be somebody who we've got, as an example, we've got one of our franchisee who's built thousands of flats in Dubai, came back to the UK because he's a UK national, came back to the UK and wanted to set up in the UK again. Now, you speaking to that person might not be particularly relevant, but you speaking to somebody that's sort of started from a similar position to you would be more relevant to you to see how they've done. So if you speak to Sam on franchise@source.co, he can put you in touch with somebody local to you who's coming from a similar sort of background, similar sort of position as you, for you to get a better idea as to what we've done for them. Do you offer online courses as a franchisee? Based in South London could be quite expensive. So Jen, we are actually putting all of our courses online this year. We have started doing so, and we have a course for HMO, which is online already, and gradually the rest of our courses will be going online. So over time, yes, we absolutely will. That's all questions currently answered. Just wait here for a second, just to see if anybody's got anything else. Okay. So thanks very much for joining me. Really appreciate it. You'll get a copy of this recording. But if you've got any further questions, then please go to franchise@source.co and we'll help you out from there. But thanks very much for your time this afternoon, guys. I hope you have an enjoyable rest of the day. Thanks. Bye-bye.